Good morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call. It's the 16th of July. I'm Mark Gardner. Stocks bounced sort of a little bit again overnight. The NASDAQ 100, I think, was down very slightly. But the Dow and the S&P and things still slightly up on what can only be described as a completely delusional inflation view. So look, we had this here yesterday, but we're PPI's back to around about the 5.5 from 6. The target's 2, but the market's seeing that as an improvement. Look, folks, it's going to be a quick one today because the news is not worth passing on, I've got to say. All we saw was the hot money switch from chip stocks back into the hyperscalers. Tomorrow it'll probably be the reverse, as it has been back and forth for the last week and a half to 2 weeks. We're just kind of washing around at the moment while investors just put their fingers in their ears and ignore the fact that we're in our 5th day of strikes. The US missiles hit Thumb Island, Iran counterstrikes. The Strait's closed. Oil's going to keep grinding higher, which is going to unwind all that inflation, relief, and we're going to start talking rate hikes again. So, really, it's one of those days that it makes it pretty easy to do the podcast or the morning podcast because this is going to be about 4 minutes long. Look, there it is. There, the ASX grinding higher. A fair bit of that was on copper and Rio's results and things. We got BHP's results today. Nikkei and Hang Seng heading higher, but the Dow, S&P, NASDAQ. So the NASDAQ Composite Index, which is a broader index, is up. But look, SpaceX dragging on the NASDAQ 100, and it traded below the IPO price last night. But look, I would say that we're sort of weeks away from a significant pullback. For those of you who use livewiremarkets.com, just go and find me there. I wrote an article for them yesterday and basically outlining the complacency, the high level of margin lending that's going on. So we've gone up $400 billion in retail margin lending. There's no put coverage to the downside for the fund managers, and they've also got no cash. So when those three things combine generally, and the market's ignoring the fundamentals, the value, basically the market's ignoring everything except for chart momentum, and just trusting in the fact that earnings is going to be great, then usually it doesn't end well. So I got pretty big concerns around the hyperscalers, given that Micron, SK Hynix, and Samsung have collectively made, tens of billions of dollars extra in 1 quarter alone. The guys writing the checks are going to be the hyperscalers, and those hyperscalers are looking like going into negative free cash flow this year, which, is, we're going to start to see that investors really pull back on those, and no matter how much they beat on EPS and revenue, it doesn't really matter when your capex is blowing out by 20% every time you report every quarter. So, crude's still higher, and given the traffic numbers that are basically reported, we're back down to relatively zero. Essentially, the war is back into full-fledged, attacks. Essentially, we are at the highest number of attacks since the first 40 days of the war. And if you want to peel back on it and put your tinfoil hat on, that memorandum of understanding, one really important thing that did do for Trump was reset his executive powers to, so he's only allowed to continue that war without Congress approval for 60 days. That 60 days was up. That MOU may have just been a way to reset that 60 days so he can keep running it. He said some fairly aggressive things. I think the midterms are effectively lost for the Republican Party at this point. And he now has the problem where he's installed a bunch of new senators and House reps for the midterms in the primaries. So he's also got quite a number of people from his own party that literally hate him and want to roll the wrecking ball before they leave. And we're almost certain to, I would say, 90% plus chance to roll into another record-breaking government shutdown in September. Democrats will have no motivation at all, because it's just going to help them in the midterms. And now he's lost his own party with the Republican Party, and he's got a bunch of bitter sitting members that he's effectively fired. So yeah, essentially we're heading into, bad news hasn't moved the needle this year at all for whatever reason. But when everyone's a little bit leveraged up, you can't avoid those margin calls. So those copper earnings though, for Rio doubled the group earnings growth, and copper since early 2024 is up 78%. BHP Rio only up 32 and 28. Freeport McMoran's up around about 50, which is US copper producer. Copper's really become the safe haven, and the one with the most demand, underlying demand and underlying mid-tone. So we probably expect fairly good things out of BHP today as well. TSMC and United Health, and then Netflix as well tomorrow morning. We got some small numbers today, and yeah, to be honest, that really wraps it up. I'm not going to bore you. If you want to go, and also part of that, the Livewire article I wrote, fair bit of that, that content is on our weekly podcast, Bulls versus Bears. Ep 127's out now on Spotify, YouTube, or Apple Podcasts. If you're holding S&P ETFs, IVV, or any of those SPY, you're really not utilizing your capital efficiently. Our structured investment by the dip is an S&P 500 index where you put down a fifth as much capital, and you essentially optimize your entry by buying the dip over the next 4 months up until November. It's a great product. It has exactly the same underlying. It's just better, basically. So if you're holding any of those index S&P or index ETF investments, do yourself a favor. It's open to retail. It's open to wholesale. Scan the code. Get rid of your ETFs. Get into this. It's a much better deal in the long run, and it will get your money to work much harder for you. But thanks for listening, guys. Hopefully something of interest will happen tomorrow. We'll probably cover some TSMC earnings. And yeah, we'll speak again tomorrow.